Hello, everybody. Welcome back to the channel. This week, the stock market is very volatile. We saw what happens when volatility increases and all the premium that gets injected into your option plays that you have on. I hope you're able to manage your positions correctly and you didn't take losses where you didn't need to. And hopefully, you guys made a profit this week because obviously, when volatility increases, there's opportunities to sell at safer strikes. So hopefully, that happened. I want to take a moment to say thank you to everyone who's subscribed to this channel so far. We just hit 1,000 subscribers, which is a nice milestone for a small YouTube channel like this. And it really does motivate me to continue doing this going forward and show what's going on. This video is where I go over all my trades for the week. This is actually like the 33rd video of this series. So that's 33 weeks. You can see my trade history going back, and I show you everything, the good, the bad, the stupid. Even today's video, I'm going to show you a trade I did where I instantly lost money doing a stupid mistake. It wasn't even like the trade was wrong. It was just a stupid mistake, and a couple $100 gone like that. So just avoid the mistakes. And so first off, here's the daily close snapshots. You can see Monday and Tuesday, my portfolio didn't really move much, and that's because I have some bearish positions on that were profiting while the stock market was going down. Wednesday, I benefited from the fear being removed after that meeting. So I had a positive day on Wednesday, and Thursday and Friday just kind of evened out. Progress report overview. After all this excitement for this week, I'm only up about $400, so can't complain because it's still a profit. 0.23% return for the week, and my realized premium for December increased a little bit to 7,200. And overall, I mean, I can't complain. Here's the monthly realized premium spreadsheet that shows the result of every month since I've been selling options, and I mean, it's still pretty cool to look at that I've made 83,000 selling options, and back here my account was only 64,000 in size. So since then, in a year and a half, I've made more than what I started with. Like, that's just kind of mind blowing to think about. Even with this bad quarter here, where I lost a lot of money for 4 months straight. All right, so this week's trades, a lot of this I talked about on my Tuesday morning video on my Monday market recap. And the quick overview is I saw opportunity to sell some puts when volatility increased on a couple stocks, so I did that. I rolled my Virgin Galactic, locked in some gains on some stocks that I thought might drop going into the meeting on Wednesday, and picked up some income ETFs. Then after all that, Tuesday, I decided to put my hand on the stove again and play on Tesla. I thought it was going to drop down significantly and bought some puts on Tesla. Ended up closing out for $441 gain just moments later. And I held them on, could have made more money, but also if I held through expiration, would have lost money. So just trying to time the market. So far, I've been pretty good about doing it, but like it's not the best thing to be doing. So this is kind of like the trades, like don't be like me disclaimer. Apple, here's the Apple bearish play that went up a lot on Wednesday, or I think this is still Tuesday. So Apple, I was able to lock this in when Apple dropped to 170. I was thinking it might just start going back up, so I want to take off that bearish play. Picked up some leaps on Grab that expire in 2024. This is actually up like 20% already, so that's pretty cool. Decided to pick up some Sun stock when it was trading at 268. I think this could be like another quick swing trade. When Suns gets back to go up to like 3 or maybe 310, I'll sell it, lock in a small gain. And then here comes the stupid mistake I made. So I bought up a PMCC on KMB, and I went and bought a long call, and I was able to get an instant fill at 36.70. No, I didn't. Turns out I clicked sell long call leap for 36.70. So when I put this on, I was like, whoa, the bid just went up like $3. Maybe I just turn around and sell this for $300. Like, no, I sold a leap. And so I instantly went through and closed that position because I wasn't going to let a mistake dictate how I trade or try to chase to make up that money for making that mistake. So instantly $287 lost because I was being click happy and did not put in what I meant to put in. And that's because I usually sell premium. So when I go to buy premium, just force of habit is to go click on that sell. Just don't make this mistake with leaps because of the spread. Like, that's an instant huge loss because the spreads for leaps are huge. If this was like a 2-week play, Probably could have made out with like a $5 or $10 loss, but because it's a leap and the spreads are huge, it's a costly mistake to make. So when you're buying those leaps, make sure you're doing what you actually expect to be doing. So then, anyway, I decided to go ahead and buy a different strike so that I don't cause like a tax wash. The tax wash rule by selling and buying the same security at the same time. So I wanted to have that loss for this year. I might as well make something out of it. So changed my strike price, bought a new leap, and then I sold a short call against it for 310, which would be enough to make up for the mistake I made if KMB breaches 140, which it currently is. So come January 28th, this position might be closed down for a small gain if you include that mistake. So that's how I'm playing that one. If KMB drops, then obviously I lowered my cost basis on this by 310, which would be pretty nice too. So either way, I think this PMCC is going to be fine. NIO, I ended up rolling my 35 put out to January 28th. I was able to lower the strike by 2. So, and receive a credit for doing that. Pretty cool. Zoom, the extrinsic value was like $10, and this was on Tuesday still. So I decided to go ahead and close this down, roll it out. I did the double down row. So I sold 2 puts to be able to lower my strike drastically. My probability of being in the money, my probability of being out of the money increased from 40% to 90% when I made this trade, which is why I did it. Turns out Zoom did have a rally on Friday, so this would have been fine to just let go completely, but instead, now I have to wait till January 28th to get out of this Zoom position for a small net profit. And then Friday, I was able to close my Snow Bear put spread because Snow was down to like 330. So this spread is completely in the money. I just didn't feel like letting it sit there because I think Snow might just bounce up and this might be, this could be tested again. So I decided to just lock in the gain, move on. From all these trades, I lost $419 in realized income. And then I did have a couple positions expiring this week, all of which are in the money. Go back, my bad. And so I have 3 puts on Palantir that I'll be buying at $22 each. So I realized 105 from the option play, although I'm down overall on the shares now, so I have an unrealized loss on Palantir. I will when they get assigned the shares. And then same thing with Ride. Ride's down to $4, so I've lost $50 per contract on the stock, but I still made the money from selling the put. So I realized a gain now, and I have an unrealized loss on the shares I'm going to be owning. And then Nusi looks like it finished in the money, and I'm fine. I was fine with doubling my position on Nusi, but that was before I decided to start off like a huge dividend income thing, so that kind of throws off my balancing. I have to think about how I want to manage that moving forward. So if you add in that realized income from that, it's 160, although that does come with some unrealized losses, so just be aware of that. Dividends, now that I have some ETFs and stuff, you can see what my projected estimated annual income is, and that's $4,100. Although I'm picking up another 500 shares of Nusi, so that's going to be over 5K. Just a neat little sheet from Interactive Brokers where it projects how much money you can be making each month. So pretty neat. Current positions. Let's see if there's anything worth talking about on this one. You already talked about all that stuff. These are the 3 contracts that are expiring. I'm going to be put shares on Saturday. So I'll have 300 shares of Palantir, 300 shares of Ride, and another 500 shares of Nusi at the cost basis of like these strike prices here. Kind of looking if there's anything I want to put on here. Zoom, you can see the Zoom that I rolled to is already up 47%. Like if this wasn't part of a rolled position, I'd probably close this out. But since it's part of a rolled position, and I think I would need this to be at like 30 or 40 cents to close it for a break even from that loss I had. So this one I'm going to let just sit there and cook because I think Zoom's going to go back up. This should be a safe $700 that I put in my pocket eventually. Just have to be patient. KMB, this is the short call I put against my PMCC or my long call. And you can see that's down because KMB went up. On the flip side, the leap seems to be gaining value quicker than the short call was losing, so that's kind of neat. Oh, and for this Palantir position, I plan on attacking the wheel. I made a video about that. I'll put it up here. And basically, what I'm going to be doing is selling puts on the stock, and then that allows me to sell a cover call closer to the money, so I can just lower the cost basis of this until I get breached and get the stock called away and have a net profit overall on the trade. So that's the plan for Palantir. And I think that wraps up this video. If you guys want to see that wheel video, go ahead and click the link to the side, and see you guys tomorrow.